Okay, let's go back to this chart and take a look here. Gold breaking out. Remember, our position uptrend alert came on February the 1st. Now, remember, we have three different trends that we track here at FTM Daily. There is a swing trend, right? In fact, let me make this picture a little smaller so I can talk about that first, and then we will look at this. We have the swing trend, right? There is a swing trend. Then we also have the position trend, and then we have the long-term trend. Now, let's talk about these briefly. These are three different time frames that our system is equipped to identify. Now, we could probably do other time frames as well. In fact, we definitely could. But these are the three most popular, I would say, with average traders. Swing traders are wanting to get in and out of the market quickly. Position traders want to catch a good position and ride it for a while. The swing trader only wants to catch a part of that position trade. Long term, these guys are looking for major trend shifts and will stay in for a very long time, right? And in fact, I almost view myself as a long-term trader when it comes to my own IRAs. I know that many people frown on that. I know that if you listen to a lot of the gurus on television and you listen to a lot of the financial media and you read a lot of the big books out there on finance, they'll always tell you the people who keep their money in the market forever, like people like Warren Buffett, they end up doing best. Well, that's true and not so true. It is true if your stocks are paying you a dividend. That's one thing that they don't often mention with Warren Buffett. Warren Buffett loves dividend-paying stocks. If you buy dividend-paying stocks and you hold on to them for the long haul, I like that strategy. That's a good strategy. But that's not typically what most people do. Most people will put together a portfolio or have somebody else put a portfolio together for them, and then they just sit in it, and then they just wait, right? They wait until retirement. Well, this has been devastating for the last several cycles, as we have had boom-bust cycles with this Fed. And so what we do is we approach all of our stock handling in one of these three ways. So, you know, last March or April of 2015, I liquidated all of my holdings, and I did a podcast called Buy and Hold is Dead. And we got out of the stock market. We told you at the time the reason why we got out of the stock market was we believed that the upside potential that remained left was far outweighed by the potential downside that existed. And that turned out to be true. You know, that turned out to be very true. In fact, the market is now in a full-blown long-term downtrend. Our market barometer is red on the on the long-term trend, as well on the swing trend. And so, to me, I don't buy into the idea of buying stocks, holding on to them through a massive downturn, and then riding them back up. See, that's just not what I believe. I just don't believe that. That's not something I want to sit through. To me, if a downtrend forms, I want out, because these things move very clearly. They move in uptrends and they move in downtrends. Now, let me say this about the position trend in particular. You're going to see us start making more of an emphasis upon the position trend, because this right here is probably my favorite one. And the reason is the position trend. And let's also define these real quickly. A swing trend is a daily chart, right? We will set this up on a daily chart. This will be a daily time frame. A position trend will be set up on a weekly chart. When you're looking at a weekly chart, you can often see the position trend. A long-term trend is set up on a monthly chart. This one's like the Titanic, right? And so it takes a while to change, but when it changes, it takes forever to change back. So this is a monthly chart time frame, long-term. This is a weekly time frame for the position, and this is a daily chart, the swing trend. My favorite might be the position trend, and the reason why is because it will often come before a long-term trend, right? So you'll typically get a swing trend, then you'll get a position trend, and then you'll get a long-term trend, right? And then when you get so once everything is green, right, everything's green all across the board, then you'll start getting what? A red, when things turn around, you get a red swing trend, then you get a red position trend, and then you get a red long-term trend. The position trend really is the big clincher right before the big long-term trend. So we're going to issue a long-term trend, uptrend, or like a long-term buy signal on gold and silver whenever they reach that level. But you see, the position trend that we just gave on the 1st of February is a precursor to that, right? It is a precursor to that. So the position trend is one of my favorites. Now, in the position trend, we had both gold and we had silver and we had gold mining, GDX, and we had silver mining, SIL, all triggering at the same time, well, in the same week. And that was all last week at the beginning of the 1st. And you can see here that this is done really nicely here, this chart of gold. The breakout came on February 1st. Here was the position buy signal at around 1140. We were able to get in and do very well with GDX so far. And it's good to see, by the way, gold breaking above its 1180 resistance. This will turn green. This will actually turn into support if gold is able to close the week above 1180. That'll be really big. We haven't had that since last spring. But now take a look here at GDX. Here's a chart of GDX, and you can see what's happened here. Big volume. We got in on GDX, and we noticed that this downtrend that had been going on for 3 or 4 years, and you can see the ceiling here, it would bump into this area here on GDX, kept having a hard time, and then here, look here, we broke out. We broke out of this multi-year. Look, that's 2015, that's 2014, that's 2013, that's 2016. This is a multi-year trend. And you can see that it was finding support here, and it was almost like it was just dropping, right? It was in a nice downtrend, very clear, finding support down here. But something happened at around $13. You know, all of these trends get tired. They get tired. And here's what you'll often notice, and this is a big key for those of you who are learning trend trading. Pay very close attention to what I'm getting ready to tell you. This area right here is interesting right before the breakout, because you'll notice that oftentimes whenever a market begins to consolidate and it begins to bottom, you will see one of two things. Either an absolute collapse in volume, where it's just very, very small, like something over here, for example, maybe something like this over here where it's very small, or you get excessive amounts of volume, right? And we'll talk about what those two things mean at the point of consolidation. It's a little bit tedious, so we're not going to get into that right now. But here's what I want you to know, is that what we noticed was that this ETF, GDX, gold mining, it stopped following this narrative. It stopped finding new lows along this bottom, and instead it started catching 1290, which was a flat line. It started flatlining here, so it would try to rise and it would bounce off this floor, and it no longer followed this script, right, which was going down. It no longer followed that line. It changed at 1290 and started riding sideways. Okay, so that tells us that maybe this downtrend may be bottoming, right? This looked like a bottom to us. And so we began to tell you about GDX, and we began to say, now look here, this multi-year sell-off is beginning to find support at 1290, major support at 1290. So is this the bottom? We said time would tell. We don't know. Well, on the 1st of February, GDX broke out above this area, which was a very big deal. It tried here, it failed. It tried here, it failed. It tried back in 2014, and it failed. And it now finally succeeded. Also, if you'll notice, the rise in volume on this big sell-off is really getting big. The 3 biggest volume days we've had have occurred in GDX over the last 12 months, and in fact, even less than that. So there's something going on here, and it's also occurred since we've hit this 1290 bottom. So there's something going on. There's a lot of gold miners out there and silver miners out there that are leaping higher today. A pullback today or a pause may be a good entry signal. And what we're going to do is we're going to talk about a couple of different mining companies. I'm going to show you how to look these up. We're going to use PHYS today. We're going to use the PHYS screener. And let me show you how to do this. And we're going to take a look at a couple of gold stocks and a couple of silver stocks. And I'll show you how I analyze them. Plus, we got a few questions from you about different gold and silver stocks, so we'll talk about those. Let's just pull up PHYS here. PHYS. Let's go ahead and go into the screener. There we go. All right, so you simply go to PHYS.com and go to the screener. And once there, you have a bunch of stocks. In fact, if you look at the screener on the default setting, you'll notice that there's 7,257 stocks that you could screen. Well, let's go ahead and take a look for a particular industry. In fact, the easiest way to do this is just type in a stock that you know, like, for example, FSM. FSM is for Fortuna Silver Mines. We know that it's a silver stock. So when we go to the stock, we can simply click on, we see that it's the name of the stock here. We see the exchange, New York Stock Exchange. We see it's part of the basic materials sector, right? Basic materials sector, we're familiar with that. And then we see silver, and then we see Canada. So this is kind of a trail here that's leading us down a hole. So if we click on this, it's going to show us a list of all of the basic material stocks. You'll see that there are how many? How many of them are there? There are 590 basic material stocks. We're not interested in looking at all basic material stocks because that includes things like aluminum, gold, oil and gas, whatever. We're not interested in all of that. We want to pay attention to gold and silver. So the next thing we can do is silver. So this is the sector, right? The basic materials is the sector, and silver is the industry, right? Two different things. Remember, the industry is inside the sector. And then finally, it gives us this little piece of information here. It gives us the country. So if we really want to delve down and only look at Canadian silver companies, then we could also do that as well. But for now, we're going to focus on silver, and we're just going to click the silver tab. So now you'll see that the silver industry is highlighted up here. And so now we're staring at how many stocks? 11. 11 stocks. All right. So now, taking a look here at these stocks here, we see that there are 11 stocks, and we see First Majestic, AG. We see Coeur Mining, which I would imagine is in Coeur d'Alene in Idaho. Endeavor Silver, Fortuna Silver Mines, Great Panther Silver, Hecla Mining, which has been around for quite some time. Mines Management, Mag Silver, Pan American Silver, that's a big one, PAAS. Silver Wheaton, Silver Standard Resources. Okay, so there we go. We got all these different silver mining stocks. Now, let's assume you're not an expert in silver mining. Let's say that you have no clue about silver mining, but you believe that silver mining may do well. Well, the first thing that you can do is find out what your options are by going to a screener and simply finding the silver stocks, right? So now we know here are our choices, right? This is a good list of stocks that we can start with. Now, the first thing that I do when I get here is I click on the market cap button. And the reason I do is I want to find out who the big player is in this particular industry group. And when I do this, I automatically see that Silver Wheaton pops up to the very top. SLW, one of my favorite silver companies. Not as big as a fan as I used to be. Really enjoyed Silver Wheaton in the last run. Fully expect Silver Wheaton to do well. But here's what I want you to notice. And this is a little bit bizarre. We'll look at it on the next tab, but it's this PE ratio here. You notice this? In order to have a PE ratio, what is a PE ratio? A PE ratio is a price-to-earnings ratio. Price to earnings. It's a simple mathematical formula where you take the price of the stock and you divide it by the earnings of the stock, and that gives you a number. Now, as you can imagine, if your stock price is $5, right, and then your earnings are 0, or in some cases, negative earnings, then what's your PE going to be? Well, you're not going to have one, right? Because anything divided by 0 or less is just going to be a 0 or a negative number, right? So it's non-existent. Therefore, you'll notice that there are not a lot of PEs in the silver mining industry because there's not a lot of earnings in the silver mining industry, right? Earnings are the lifeblood of what drive up stocks. Without earnings, it's hard to really sustain an uptrend. So anyway, long story short, we see two companies here that really have earnings, Silver Wheaton and Fortuna. Now, when you take a look at this and you look at them, you see these are both pretty high. And the way that you know, let's say you don't even know anything about PE ratios. Well, you'll know they're high because they're in red, right? You see other numbers are in green. This is kind of a nice little default that FinViz screener. This is my favorite screener, by the way. There's a few others out there that we use that are a lot more technical. But this one here, just for the average retail investor, this one is, I tell you, it's just perfect and it's free. I love it. Anyway, these numbers are red, which tells you that it's bad, right? That's not good. 64 and 86, those numbers are way too high for a PE ratio, right? They're too high. And then you come over here as well, and you can see other numbers as well. These, of course, are just related to price. Let's move on to the next tab. Let's look at valuation. And here we have a lot more detail. And here we're able to see earnings per share. This is a very important number. Earnings per share this year, earnings per share next year, earnings per share the past 5 years, earnings per share the next 5 years, sales for the last 5 years. Guys, when you buy a stock, whenever you put a stock in your portfolio, if it is not purely a speculative trade, if it is not purely a move that you think is just going to move quickly, if it's a stock that you want to hold on to because you believe in the company, you need to have some evidence in the earnings per share. Earnings per share is the lifeblood of any growth company. And in fact, these silver stocks indeed are by almost every definition growth companies. Therefore, you should pay attention to their earnings per share. And you do want companies that operate efficiently in the marketplace. And that's hard to find in silver and gold mining. As we've talked about, they use a lot of cash. They're spendthrifts. They're known for not using their cash wisely on investing. They hardly ever provide any kind of return of capital to their investors. Like return on equity is normally all negative. Look at the return on equity on all of these companies, right? So temper your enthusiasm with individual silver mining companies. Yes, we're going to play some, but realize that a lot of them still look pretty downright bad, right? Now, the other thing to pay attention to, and I think this is a real biggie in silver mining and in gold mining, is the long-term debt to equity and the debt to equity, right? These are real important, and you want to pay attention to them. Green is good, right? It means they don't have a whole lot. Red, it means that they have quite a bit. 0.75 right here is the equity ratio, the debt to equity ratio. So this company right here, CDE, is sitting on quite a bit of debt. It's pretty clear based upon their debt to equity ratio. Others are debt-free, and that's good to know about, right? Then you can see operating margins and profit margins. This is all very easy to look at, isn't it? And what you can also do is you can sort based upon those criteria, based upon those metrics. And you can also see the earnings real quickly. Who's going to be reporting? A lot of companies reporting this month because it's earnings season. Okay, so there we have silver mining companies. Out of this list, I'll tell you that I do like, let me just kind of go through and show you the ones. Now remember, this is not a recommendation to you at all in any way, stretch of the imagination. This is simply me telling you what companies I have personally investigated and that I plan on purchasing on the next major run, which looks like we're entering. SLW is one of my favorites. I do like SLW, Silver Wheaton. They have a different kind of business model. They do not pull silver out of the ground. They don't go out and buy mines and mine. Although they do have some exposure to that. What they have is a silver streaming kind of model. And if you're not familiar with that, the very first employee that Silver Wheaton hired was a gentleman by the name of Nolan Watson. Nolan Watson, friend of ours, friend of the show. In fact, he's been on the program before. We brought him on whenever he was launching his company, Sandstorm Gold, Sandstorm Metals and Energy is what the company was. And we had him on, and he talked about Silver Wheaton, and he set up Sandstorm, the same exact business model as Silver Wheaton. He was the one who masterminded the silver streaming concept and really took it big and really used it to grow Silver Wheaton's bottom line. And then he left and started Sandstorm Gold and applied the same exact strategy. Sandstorm has not done as well, although as we're moving into this new environment, perhaps we'll see a shift. Let's move now to gold. Let's go. Oh, I was going to tell you real quickly these stocks, didn't I? Let me show you a couple here. One, SLW. Okay, I do like it. I do like SLW as a silver play. AG. I was asked about AG. AG is a very small little company. You can see the price of the stock is $3.84. This is called First Majestic Silver. I do like First Majestic Silver. AG is one of my preferred silver stocks to play whenever we do get a nice position trend like we have now. I'm not a fan of Hecla. I know there's a lot of people who like Hecla. I'm not a fan. I do like Pan American Silver as well, and to a certain extent, Fortuna as well. I mean, I've certainly investigated it, Pan American, First Majestic, and Silver Wheaton. So I would say those four on this list are the ones that I would be watching personally. Now let's move this over to gold. Let's move this over to gold now. So let's just come down here. Now we're going through, we're going through industry groups here. Now you can look for any industry group, but we're going to look for gold. There we go. And now it tells us we have 44 stocks. We have 44 gold mining stocks to choose from, okay? Now, you can go out and you can get people's recommendations on what they think they're going to buy. And that's good, and that's helpful, right? But remember, most people they aren't using any kind of system at all, right? And that's the thing that you got to be careful of. And I remember early on learning that quickly, is that how many people have been saying to buy something, before the actual trend occurs. When the trend begins, if you want the most efficient use of your capital, you reserve your buying for that moment. Now, gold and silver are different because they do have an economic crisis component to them. They are insurance. So we're not simply trading gold and silver just to be trading it. I own gold and silver because I believe that the economic crisis is going to worsen. But when it comes to actually buying gold mining, I don't buy gold mining to protect myself from an economic crisis, right? Gold mining stocks will do well when gold does well, but I would not necessarily trust them in a time of great economic crisis like I would trust my gold in my hand, okay? But here's what I want to tell you. You can come into a screener and find gold stocks and do your own due diligence and decide what matters to you, right? So you can come in here and you can decide how much of a PE do I want to pay, for a particular company, and do I want to trade stocks that don't have PEs, meaning they don't have earnings, right? Do I want to trade companies like that don't have any earnings? You have to realize that if you're trading a company that does not have any earnings, you are gambling, right? There's just pure and simple. You're gambling. And so you've got to realize that. Not every single trade is a gamble, right? If you have a company that has great earnings, pays a dividend, has great long-term prospects, and is turning a buck, returning investment to you, returning equity to you, that you're simply investing in a business. I mean, there may be a speculative element to it, but in the end, you are really investing in a real business that provides real return on capital and that you can justify as a real investment or even a trade. But when you're dealing with a company that does not have a PE ratio, right, which is what the majority of gold and silver stocks are, they don't have PE ratios because they don't have any earnings, you're gambling. You're gambling. So you got to be real careful, right? And people will come out and be real religious about their particular stocks, and they'll tell you why it has to soar and why it does this and why it does that. And we're in that season now, because now that we've called the position trend on gold, you're seeing it everywhere, aren't you? You're starting to see it. people are saying it's time to get into gold. Well, right now it is. I mean, no doubt about it. We do have a position trend. But be cautious on these individual stocks because, listen to me now, you need to really hear me on this. Those of you who are new, I want to protect some of you from getting over-leveraged here because that tends to be what happens is people will really get over-leveraged and things might change. We're still in the very think about let's do this. This might help. Before I talk about gold mining. What was I going to say? Oh, this right here. Remember the new position trend comes right here. Right here. Think about position trends and long-term trends, especially, as airplanes. Okay? So the plane comes in for a landing, right? Comes in for a landing. Oftentimes, as the plane is trying to land, that can be the most dangerous part of the plane trip, can it? When you're in the air on a plane and you're cruising along at altitudes, things are pretty fine. Yeah, you might hit some turbulence, but turbulence is not going to bring the plane down, right? Typically, just like your own body, just like your own human experience, the most vulnerable times for you are what? Being born, right? Being young, right? Being young and being susceptible and vulnerable, and also being old, right? Being extremely old and being, incapable of taking care of yourself or whatever. Those are the two most vulnerable times for a human. It's the beginning of life and the end of life. When you're on an airplane, same thing. When you get on the airplane, it's one of the more dangerous times, right? Is the takeoff. I mean, statistically speaking, right? Not that you're going to go down. It's very unlikely that's going to happen. But if you're going to go down, right, it usually happens in the very beginning of the flight or the very end of the flight, the two most vulnerable times of the flight. This is exactly the same concept that trends are in. The position trend in gold is extremely vulnerable right now. Why? Because it's just beginning, right? It doesn't mean that it will crash. But if it's going to crash, it's going to crash very likely very, very soon because this is the launching. Imagine the airplane taking off. This is the beginning of a position trend, which tends to be a little longer term. So it likely will continue higher. But if it's going to fail, you're going to see it fairly soon, right? And therefore, you want to be cautious about piling in to a bunch of these companies that have no earnings, right? Because we are in a red market. We are in a overall downturn in the overall market. And if the Fed tries to do something to goose stocks, it could pull gold back and it could hurt these companies. And some of these companies are jumping big, and the only reason they're jumping big is because gold is rising. And if gold pulls back temporarily, some of these stocks could get smashed. So be very, very cautious with gold and silver mining. Always use caution no matter what kind of stock you're trading. Now, here we have the gold stocks. Let's move on to this real quickly, and then we'll move on. We have 44 stocks here. Now, let's go ahead and sort them the way that we had said. We see that we have U.S. and Canada stocks. We have South African mining stocks in here. So there's, we don't really are not really limiting it or restricting it by country, but let's just go ahead and sort them by market cap. This will tell us quickly who the big players are. Anybody who has $1 billion or more in market cap in this environment, in this particular industry right now, is considered one of the bigger companies. You have three really big companies that dominate gold mining. They are Barrick Gold, ABX, Newmont, NEM, and Goldcorp, GG. Goldcorp owes much of its benefit that it's received over the years to a gentleman by the name of McEwen. And McEwen runs McEwen Mining right here, MUX. We got a question about that one from David in our audience. And David, I wanted to tell you, I think you had also asked about AG. AG is a company that I like. MUX is also a company that I like. McEwen was going to be one of the little companies that we were going to recommend, and it's a Canadian company. MUX, McEwen Mining. Do some research. It's a Canadian-based mining company run by a very respected gentleman named McEwen. And you can look up MUX, McEwen Mining, do your own due diligence. But it is certainly one of my favorite stocks in this particular sector. Barrick, Newmont, and Goldcorp, however, are the big three dominating players. Then you have some big ones, but smaller relatively speaking, like Franco-Nevada, Rand Gold, Agnico Eagle Mines. This one's pretty popular, AEM, Anglo Gold, Gold Fields, and the list goes on. Yamana Gold. Some of these companies have been around for quite a long time. You can also sort them by volume to see who are the biggest or the most widely traded stocks, and you'll find out the Yamana Gold and Kinross are two of the biggest traded companies, 11 million, and in fact, that's just like Barrick, followed by Newmont and Goldcorp. So it's interesting that Yamana and Kinross are two companies that, although they have smaller market cap, they have much more speculative buying. You see the volume here. So that's interesting. IM Gold, also a very well-known company, IAG. All of these companies have been rallying nicely on the news of rising gold prices. Taking a look here, we can sort by PE ratio now, and you can see that some of these companies have very, very, very high PE ratios, meaning that they do have earnings, but as you can see, they're wildly overvalued according to their PE ratio. Taking a look here also, you can look at PEG. We've discussed PEG in the past, and this is a very important metric as well. Earnings per share next year, next 5 years, all of this data is very helpful to pay attention to. You can also see that some of these stocks pay dividends. You can sort them by dividend and see that SBGL, for example, and AUI pay decent dividends, as does DRD and Royal Gold. Royal Gold, RGLD, this is another one of my favorite gold mining companies. It is a company that is a streaming company, very similar to Silver Wheaton. It's kind of the Silver Wheaton on the gold side. So Royal Gold is an interesting play. Let me go through here and tell you a few of the companies that jump out at me that I have traded over the years and that I have done investigation on and that I like. Between Barrick, Newmont, and Goldcorp, I like Goldcorp probably the most out of those three. It doesn't necessarily mean on the long term, but the investigation I have done, I've always liked Goldcorp. I like the company itself. Also, as I mentioned, MUX, which is McEwen Mining. Really think you ought to maybe take a look at that one. Just do a little bit of research. You might be interested. They just came back on the New York Stock Exchange. Their stock has been soaring since the beginning of the year, and I believe they could go probably another 100 to 200% higher. MUX, plenty of room to move. Sandstorm Gold, this is the one that I told you was owned by Nolan Watson. Used to be over at Silver Wheaton. So Sandstorm Gold is an interesting play. It's a very cheap company. It's built in the same exact process as Silver Wheaton as well. So it's like Royal Gold. It's just a very smaller version. GSS I like to trade occasionally. This one has been going wild. We've had a few emails from some of you. You know that I like to trade Golden Star, and GSS is a little penny stock in Canada. This thing's caught on fire, running from about 18 cents. We had triggered in our system and went up to about 28 cents. Some of you made a killing on GSS by keeping your eyes on that one. That was a great trade.